GM and welcome back to the channel. In this one, we have a very cheeky grin on the face of Raoul Pal here. We've got his breakdown from the crypto banter the other day, talking about the bullish turn coming for crypto and the wider markets here, with liquidity improving, interest rates coming down, inflation on its way back down to 2% or less, and why we should be more bullish than bearish right now because we are at the precipice of a turning point. So he sat in the Cayman Islands, we're sat here in the UK. I think we should take his macro outlook seriously. Let's jump into this one and see what he says. We got 4 main talking points to go through here. So we're going to start off here with China and the impending liquidity boost coming to the Chinese economy and how this is a forward-looking indicator. All these economies are one in the same, really. Everyone's been through the same stuff over the past few years. And with peak globalization, you can just look at the forward indicators here to see what is going to happen on the horizon. So let's jump into their first talking point here.
So let's play this through. So China's a shit show. It's quite clear. They've got a liquidity problem. They don't have enough liquidity. They've overbuilt property markets. There's too much debt in China. So what is the outcome?
The
Stimulus.
2008 playbook. This is where they invented it. Print money, stimulus.
Yeah. So there's the second largest economy in the world starting to increase stimulus.
So they're saying here that the 2008 playbook after the GFC is going to come round again, where we start to boost our economies by injecting direct cash. Now, China is the poster boy of this one over the last couple of months. As we can see from headlines like this one here, China orders state banks and funds to buy stocks. And the last time they did that was October 24th, right after US equities and bonds had bottom. So a bit of a coordinated event coming here. We'll continue.
Let's flip to Japan. What Japan has been doing is interesting. They've been holding their interest rates at this 0.5% and they've just ratcheted it up. And how they've held it there is what's known as yield curve control. They buy all bonds at that price. So bond yields can't go higher. What is that? That is printing of money. So they've been stimulating.
So this highlighting the point that over in the East, the infinite bid money printers are on. We also had news last week that China have reduced the stamp duty on stocks by 50% as well. They're really trying to get things going. So really interesting to see that the turn for the liquidity cycle is on the way. But let's catch up with the next talking point, interest rates and GDP.
265% of GDP in debt.
Okay, so they can't increase the interest rate.
If you increase the interest rates, you have to issue more debt to pay the interest, right? It's this massive problem. So what do? Keep interest rates roughly at your trend rate of GDP growth. So then your GDP can pay your interest payments. So everybody's doing the same. And I've gone back and proven it, that all of the QE that's happened since 2008 exactly equates to the interest payments from the previous cycle. That's Japan. That's the UK, that's Europe, that's the US.
So the global economies are one and the same. That is the point being made here. And countries are using the GDP to pay off their interest payments. And they do this by printing of money. So the refinancing process is underway, and the leading indicators now are some of the South American BRICS countries, which have now started their cutting cycle. So Brazil have recently kicked off things with a 50% basis points cut. This came a bit left field. People weren't expecting this, and they brought their policy rate down from 13.75 to 13.25%. So welcome to the global Ponzi game here, and you can see that they're going to refinance things when rates are lower. The rates cannot stay too high for too long, else all these countries are going to be refinancing at 5, 6, 10, 13% as we just saw, and that is super unsustainable. So we're going to see what happens when you control the levers. They're going to bring interest rates down, do the whole refinancing, and we get to play the cycle yet again. So this is the outlook here for the US economy with the interest rates for May of 2024. So almost going forward a full year. And the expectation is that we are starting to cut by this time. If you just flick through though, the market thinks by June of 24, we're actually going to be down. We're currently on 525 to 550. So that would be a reduction being priced in by that time. And if we skip forward to September, so 12 months out here, the main prediction here is for 450 to 475. So that is a 75 basis points cut from where we are over the next 12 months. And if we just think about it, the fact that the Fed said we were going to change course of action and start raising interest rates back at the end of 2021 was the reason why the crypto economy started to collapse. And so if the market can sniff out that the rates are going to be coming down again, we could see the next bullish leg for markets as they are forward looking. So the Bitcoin cycles are 4 years approximately, and that seems to coincide with the liquidity cycles here for major economies. Let's listen in again.
The normal length for a cycle, like COVID for me was the beginning of a cycle where we started printing a lot of money. That was 2020. We're now going into 2024. So are these cycles generally 4-year cycles? I mean, is that how long the up-down cycle usually is?
Yeah. And when you look at the maturity of debt for all of these governments, they're mainly in this kind of 3 to 5 year area. So every 3 to 5 years, interest rates go up because the economy's been, growing. But what happens is there's so much debt that higher interest rates lead the economy to slow down, obviously. And they then use that period to pay the interest payments on the previous cycle. So
it starts to sound a bit like a bit of a Ponzi scheme and a planned out coordinated game when you hear him break things down so clearly here. But of course, those in charge of the central banks have pretty much 2 levers to pull, which leads to a period of stop or go. And this is really interesting because we can take advantage of these long-term horizon games that are underway here, as long as you can turn off your TikTok 3-second brain and focus on the cycles as Raoul's playing out here. Well, this is definitely a game we can all win in.
But yes, 4 years has been like clockwork since 2008. Why since 2008? Something magic happened in 2008. We had a global debt jubilee. Now, most people understand a debt jubilee is none of us have to pay our debts back. What they did was something more subtle. They all said, none of you have to pay the interest on your debt. We're going to make interest rates 0. So every government was like, we now don't have to pay our interest because they'd all hit 100% of GDP in debt or higher. So there's not enough GDP growth to pay all this stuff. So this keeps moving forwards and it keeps rolling. And I don't know the way out of this yet until we get some productivity miracle and we can raise GDP growth.
So you can start to see why Raoul is super bullish here, because he can see that the turn is on its way. And as a result, we're kind of in that really neat period here where prices are highly depreciated, but there is the light at the end of the tunnel on the horizon. And we kind of have this time frame now where we can just invest into the assets that are highly likely to outperform and do really well off the back of this. So this is a good time to be bullish. If lower prices do come, that's bullish. You can buy more with your dollars, your pounds, or whatever currency you earn in locally. And then just to factor this onto his recent tweet thread about the 2024 US election, he says a lot of people are going to be angry and divided at this process. And there's a lot of like deep fakes and stuff, misinformation that's going to be going around. And as people get more angry, the way the government is going to try and bribe the votes is to print more money. He says this leads to yet more printing down the line as well. And people will actually get poorer and poorer, and despair keeps rising. And he goes on that the only way out of this is to own assets that rise in the exact situation, crypto and tech. Everything else is a wealth trap. He says even if you can afford a small amount of these assets, it will make a difference. He sees no other way. Choose wisely. Everyone's going to lose their epic minds next year. Try hard not to lose yours and take back control of your future. Then the last point to cover, the ETF approval from BlackRock. When does he think this is likely to happen? And does this all just sew in together around towards the end of this year? Let's listen into what he thinks about this. This is actually quite interesting in terms of market timings here over the next few months.
But let's say my thesis is right, that by the back end of the year, we're starting to think about maybe the Fed have gone too far, how they're going to reverse this. How do we think about that? How's crypto trading then? Bullish.
Okay, got it.
So if you're launching an ETF and Bitcoin's at 40,000, you could probably get $10 billion into it for the launching an ETF.
And $10 billion.
If it's at
$10 billion,
$25,000,
yeah, $10 billion is a serious number in a market where they have to buy spot, because here you'll have $10 billion of buying pressure in the market.
That's right. So now, if they launched it now, how much would it attract? Maybe $1 billion, maybe a couple of. Yeah, who knows, right? Had they launched it in October, how much money would have attracted? About zero. So you've got to have the mindset that people want it, and if those two things happen around the same time, oh yeah, you'll see a ton of money coming in.
So almost as if it is preordained and pre-planned, it seems that the ducks are slowly lining up in a row, and that potentially we have the BlackRock ETF, or an ETF at least, a spot ETF in the US, approved towards Q4, which culminates nicely with stocks going up, the likes of the NASDAQ potentially ripping to new all-time highs. If we look at the chart here, it is 7.5% away from all-time highs. And the kind of thesis that Raoul also puts out here is that once the NASDAQ breaks all-time highs, whilst there's record numbers of people underweight stocks, you're going to see more people bid into this asset class, and you're then going to see a trickle-down effect. People have made money, the wealth effect, and they're going to look to the sectors of the markets where there has been underperformance, and crypto highly likely to be one of the places people start to make those bets. So with these forward-looking markets, these indicators that Raoul has pointed out here, I think this is an excellent opportunity for all of us to buckle down, try and earn more funds and invest those funds wisely for this impending turn in the market, which is going to come. Markets always cycle. There will be degeneracy once again, and numbers will be going up and to the right. And now is the sweet spot in time, not financial advice, to be DCAing hard into your favorite assets. I'll leave you with that. Hope you have a good one. Share with friends. Peace.